And the disruption at the Strait of Hormuz is sending shockwaves far beyond the energy sector. Global markets are on edge as oil prices surge and volatility rises across major markets, sparking concerns about inflation, supply chains, and economic stability. To help us break down the potential impact on investors and the broader economy, we're now joined by Brendan Caldwell, Director at Caldwell Securities Limited. Brendan, thank you so much for the time today.
Hey, Theresa. Good to be here. It's interesting times.
Now, we've seen oil and gas prices spike since the closure of the Strait of Hormuz. How is that immediate shock rippling through global stock markets right now?
Well, it's been very negative for markets up until today. Before the opening this morning, President Trump said that they are in talks with Iran. As you noted in your preamble piece, Iran is unaware of any talks. Now, as the president has said, maybe they're talking to different people and it's difficult for them to communicate internally, but there seems to be certainly amount of chaos and confusion around it all over there. So, yeah, the idea of higher oil prices has been negative on the markets, other than, well, energy stocks. So Canada has been not hit as hard, at least in part because so much of our economy is energy driven. It would be nice if we could get more of it to international investors who are willing to pay rather quite a bit, particularly for our natural gas. But today the markets rallied. Maybe it's because Mr. Trump would like to see peace break out. Maybe the Iranians are right. Maybe the threat of retaliatory strikes against power plants in and other significant targets in the Middle East was enough to give him cause. Perhaps, when we saw Russia bombing Ukraine's power plants, many in the media called it a war crime. Maybe this, doing the same thing to Iran might be seen in the same light. So who knows what the motivations are? But the fact that Mr. Trump is backing off when it all gets very serious doesn't seem to be surprising to most.
And which sectors are being hit hardest by this disruption in shipping routes and energy supply? Are we mainly talking about airlines and transport, or is the sell-off broader across the S&P 500 and global market?
Oh, it's been quite broad. So yes, those that consume consume energy as a big part of their expenses. Take Air Canada, for example. It's been down quite a bit in the wake of this, and may have a rally. If this in fact does dissipate. But it's not just the energy prices. The fact that the Middle East is basically closed to air traffic. So, Dubai airport, who knows when the next flight takes off from there. So the transportation, but also industrial companies. And here's the thing, there'd been talk this morning prior to Mr. Trump saying that the peace was breaking out in the Middle East. I exaggerate slightly. That the markets were thinking that the U.S. Federal Reserve would start to hike interest rates as early as this October. And, well, hiking interest rates to control inflation brought on by higher energy prices, especially if that's done in the early autumn, wouldn't be great for Mr. Trump as the midterm elections are in November. So the idea that inflation is running away, that interest rates are going up, at the beginning or just at the cusp of these elections, wouldn't be good for his ability to do whatever he'd like to do, because to this point, Congress has been very compliant or at least non-confrontational. I think a Democratic Congress might be something different. So I think there's a lot of reasons that Mr. Trump has for calling a ceasefire at this point.
Well, market history tells us that these kind of geopolitical crises can be short-lived. Do you see that this is a temporary bout of volatility, that was a hard word, or the start of a more sustained downturn driven by higher inflation and interest rate worries?
Yeah, I think we're agreeing in that this will be short term. Mm-hmm. And even if it's not short term, the market's reaction to it will likely be short term.
Right.
Political events, I think you and I have discussed in the past, tend to be very short-lived. I think we've discussed that. The defining political event of this century was 9/11, and that the U.S. markets were higher at the end of 2001 than they were on September 10th, 2001, the day before 9/11 happened. So the most defining, like literally the last quarter century was defined by that terrorist attack. All the wars of Afghanistan, Iraq, what we're doing now in Iran, that was the pivotal event. The markets were higher after that, and have done nothing. Well, I've done almost nothing but go higher ever since. So yes, I think whatever the fallout, hopefully not literally, of this action, this conflict, it'll be relatively short-lived in the markets.
And for ordinary investors watching their portfolio swing with every headline out of the Strait of Hormuz, what practical steps should they consider taking now, if any, rather than reacting out of fear?
So many investors have said about, I want to do it when I'm feeling more comfortable. When you're feeling more comfortable, the market's already run.
Mhm.
My advice is, as it always has been, if you have money that you would like to get invested but are waiting for the right time, do a little bit now. There will never be an exact right time. You will never pick the exact bottom, nor do they sound a bell or something to let everybody know. But if you put in 25% or even 10% today, you're much more likely to be able to do the next 10% or 25%, whatever happens in the future, because you've begun the process of averaging your way in. I think that's the best course of action. And if you know you're going to need money in the near future, begin to sell a little bit now so that the next sell decisions also are easier.